Hello, I'm Luna. Every day, we tap our phones, swipe our cards, and watch as our money flows seamlessly through the digital world. Paying for a morning coffee, splitting a bill with friends, or buying a train ticket, it's all become incredibly simple, almost an afterthought. This convenience is the promise of a cashless society, a future where physical money is a relic of the past. But have you ever stopped to wonder what we might be losing in this rush towards digital everything? What is the hidden cost of all this convenience? Is there a darker side to a world without cash? Let's explore the first major concern: surveillance and data mining. Every time you make a digital payment, you create a permanent, unchangeable record of your life. It's not just about what you bought. It's about where you were, when you were there, and who you were with. Imagine your life as an open book, its pages filled not with words, but with transaction data. Corporations and governments can read this book, connecting the dots between your grocery shopping, your political donations, your travel patterns, and even your medical appointments. This creates an intricate web of personal information, a detailed profile that can be used to influence your behavior, predict your choices, and monetize your every move. We trade privacy for convenience, but the scale of this trade-off is far larger than most of us realize. You are no longer just a consumer. You are a data point in a vast, interconnected system, constantly being monitored and analyzed. This push towards a digital-only economy also raises a serious issue of financial exclusion. A cashless society, by its very nature, risks leaving a significant portion of the population behind. Think about the elderly, who may not be comfortable or familiar with smartphones and banking apps. Imagine an elderly man standing in a grocery store, cash in hand, but unable to buy food because the checkout is card-only. Consider the unbanked. Individuals without access to traditional financial services due to poverty, lack of documentation, or distrust in the system. For them, cash is not an inconvenience, it is a lifeline. In our pursuit of a sleek, efficient, and technologically advanced city, we risk creating invisible walls that marginalize the most vulnerable among us. A society that only serves the tech-savvy and financially stable is not a truly inclusive one. Finally, we must confront the growing threat of security vulnerabilities. While physical cash can be stolen, digital currency opens the door to a new and more insidious form of theft. Our life savings, once stored in a vault, now exist as lines of code, accessible from anywhere in the world. Shadowy hackers can breach digital wallets, drain bank accounts, and commit large-scale fraud with just a few keystrokes. Imagine a family gathering around a phone, watching in horror as their savings vanish in real time, their screen filled with glitching red error messages. System-wide outages can freeze entire economies, leaving everyone unable to transact. A single vulnerability, a sophisticated scam, or a state-sponsored cyber attack could have devastating consequences, proving that our digital financial infrastructure is more fragile than we might think. The digital revolution in finance is undeniably powerful, and it offers incredible benefits. But as we move further into this cashless future, we must do so with our eyes wide open. Acknowledging these hidden costs, the loss of privacy, the risk of exclusion, and the new security threats, is the first step. This isn't a call to abandon technology, but a plea for conscious awareness and responsible innovation. We need to demand stronger privacy laws that protect our data, develop systems that include everyone, and build more resilient security to safeguard our digital wealth. We have the power to shape this future, ensuring that convenience doesn't come at the cost of our freedom, our privacy, and our security. The choice for now is still ours to make. Can you get rich with digital money? It's the question that's been lighting up the internet, promising a new digital gold rush for anyone bold enough to join. But is it a real opportunity or just a fantasy? We've all seen the headlines and the stories. Someone buys a few $1,000s worth of a new digital coin, and a few years later, they're cashing out millions. These are the tales that fuel the crypto dream, painting a picture of instant fortunes made from a few clicks. It's a powerful narrative. The idea that you can bypass the traditional financial system and catapult yourself into a new class of wealth, all thanks to the power of the blockchain. The secret sauce for many of these success stories is simple: early adoption. Imagine buying Bitcoin back when it was just pennies, an obscure project known only to a small community of cypherpunks. Those who took a chance saw their small investments multiply thousands of times over. They got in on the ground floor before the rest of the world caught on. But it's not just about buying and holding anymore. The world of digital finance has exploded with new possibilities. Decentralized finance, or DeFi, is creating an entirely new financial ecosystem, offering high-yield returns through lending and staking that make traditional savings accounts look ancient. Then there are NFTs, non-fungible tokens, which have turned digital art and collectibles into multi-million-dollar assets, creating a new wave of artists and collectors who found their fortune in this digital marketplace. However, for every success story, there are countless tales of caution. This is where the dream meets a very harsh reality. The crypto market is notoriously volatile. The same asset that could double in value overnight could just as easily crash by 80% the next day. These wild price swings can wipe out fortunes as quickly as they create them. It's a high-stakes game where emotional decisions can lead to devastating losses. And the dangers don't stop there. The unregulated nature of the space makes it a breeding ground for scams. One of the most common is the rug pull, where developers launch a promising new project, attract a flood of investment, and then vanish without a trace, taking all the money with them. Security is another huge risk. If you lose the private keys to your digital wallet, there's no bank to call, no customer service to reset your password. Your funds are gone, locked away forever in the digital ether. On top of all that, governments around the world are starting to pay attention, and new regulations could dramatically change the landscape, making certain assets or activities illegal overnight. So how should you approach this volatile world? The key is to shift your mindset from get rich quick to invest smart. This isn't a lottery ticket. It's a new and complex asset class that requires a different strategy. The first and most important step is education. Before you invest a single dollar, you need to do your own research. Understand the technology, the specific projects you're interested in, and the risks involved. A smarter approach involves diversification. Instead of going all in on a single speculative coin, consider allocating a small, manageable portion of your overall investment portfolio to cryptocurrencies, an amount you would be comfortable losing. This allows you to participate in the potential upside without exposing yourself to catastrophic risk. So, can you get rich with digital money? The answer is yes, it's technically possible, but it's incredibly rare and fraught with risk. The more realistic opportunity isn't in finding the next 1000x coin, but in making strategic, informed investments for long-term growth. It's about recognizing the revolutionary potential of the technology, while respecting the very real dangers that come with it. We've all heard it. Digital money is the future. It's fast, convenient, and it's changing the way we think about finance. But this revolution has a dark side. For every person enjoying the ease of a tap-to-pay transaction, there's someone else lurking in the shadows, ready to exploit this new technology for their own illicit gains. It's a reality we can't ignore. So, how exactly do criminals twist the promise of e-money to their advantage? The primary method is money laundering. Imagine a bag of dirty cash, illegally obtained. In the digital world, this money is fed into a dizzying maze of transactions, bouncing between anonymous accounts and crossing borders in the blink of an eye. After being shuffled through this complex web, it emerges on the other side looking perfectly legitimate, or clean. Then there are the ever-present phishing scams. You might receive an email that looks like it's from your crypto exchange, urging you to log in immediately. But the link leads to a fake site designed to steal your credentials. Before you know it, your digital wallet is empty. And of course, there are the darknet markets. Sprawling, hidden bazaars, where everything from stolen data to illegal goods is sold, all paid for with cryptocurrencies that are difficult to trace. What makes digital cash such an attractive tool for these activities? It boils down to a few key features. First and foremost is anonymity, or at least the perception of it. While not all digital transactions are completely untraceable, many cryptocurrencies offer a level of pseudonymity that makes it incredibly difficult to link a transaction to a real-world identity. Criminals can operate behind a veil of digital addresses, appearing as little more than silhouettes in the vast expanse of the blockchain. Another major draw is the speed and global reach. A criminal can send millions of dollars across the planet in mere minutes, bypassing the traditional banking system with its regulations, checks, and delays. This frictionless, borderless nature makes it the perfect vehicle for funding illegal operations worldwide without raising red flags. Now, this all sounds pretty scary, but it doesn't mean you should abandon digital finance altogether. The key is to be smart and proactive about your security. So what can you do to protect yourself? First, always use reputable and well-established platforms. Whether you're using a crypto exchange or a digital payment app, Stick with the big names that have a proven track record of security. Next, and this is non-negotiable, enable two-factor authentication, or 2FA, on all your accounts. This simple step adds a crucial layer of security, requiring a code from your phone to log in, which can stop a hacker in their tracks, even if they have your password. You also need to learn how to spot phishing attempts. Be suspicious of any email or message that creates a sense of urgency, has spelling mistakes, or asks for your private information. A legitimate company will never ask for your private keys or password. Finally, for serious crypto investors, consider a hardware wallet. This is a physical device that stores your crypto offline, making it impossible for online hackers to access. Think of it as your own personal digital vault. The digital world is constantly evolving, and so are the threats within it. The power to use this technology perso and securely is in your hands. So stay informed, stay skeptical, and most importantly, stay safe.